sponsored by BitGet, the leading cryptocurrency copy trading platform. Earn up to $630 worth of rewards by signing up using the link in the description below. In this video, I'll be showing you a simple, high win rate, parabolic SAR indicator strategy. So without further ado, let's get on with the video. The parabolic SAR, or also known as the parabolic stop and reverse, is a simple to use trend indicator that does a very good job of providing us with both entry and exit signals. So first, let's apply it onto our chart. So, you go to the indicator section, type in parabolic, and click the one that says parabolic SAR. Now for the settings, I prefer to leave it as it is and just use the default settings. And so here's how the indicator would look like. Immediately, you'll see multiple dots that is positioned to be either above or below the candle. And the way we analyze the market using this indicator is actually very simple. If the dots are positioned below the candle, it indicates that the current market is on an uptrend. And if the dots are positioned above the candle, it indicates that the current market is on a downtrend. The distance between the dot and the candle also reflects how strong the trend is. The further it is from the candle, the stronger the trend. Let me show you an example. So here, we can see that the dot is below the candle, indicating that the current market is on an uptrend. Then, as the uptrend starts gaining momentum, notice that the distance between the dot and the candle also increases. And after that, as the momentum starts getting weaker, the distance between the dot and the candle also becomes narrower, until finally, the dot switches to above the candle, indicating that the direction of the trend has now reversed to the downside. Now, I'm going to show you the different strategies that you can use with the parabolic SAR. So first, a common strategy that is often used by beginner traders is they simply take long or short entries based on the position of the dots alone. For example, when the dot switches to below the candle, they take long positions. And when the dot switches to above the candle, they take short positions. Now, despite this being a famous strategy, there are actually a couple of problems if you use the indicator this way. Firstly, the parabolic SAR is a trend indicator, meaning it only works on trending markets. Remember, markets aren't always trending. It can also move within a range. And because the parabolic SAR is constantly showing signals non-stop, it means that it'll also show signals even when the market isn't trending. Let me show you an example. Here, we can see that the parabolic SAR switches to below the candle, indicating that the market is on an uptrend. And according to the strategy, we take a long position here. Next, we can see that the trend has ended and the market started moving sideways. However, notice that the parabolic SAR is still displaying entry signals even when the trend has already ended. And as a result, all the signals that the indicator displays on this ranging market ends up being a loss. So in short, the parabolic SAR only works on trending markets. If the market is on a range like this, it will display many false signals. The second problem with using the parabolic SAR this way is that it doesn't take the long-term trend into consideration. Let me explain. So let's say you enter a short position here because the parabolic SAR switches to above the candle. Now if you zoom out and look at the overall chart, you can see that the overall market is actually on an uptrend. So if you took a short position here based on signals from the parabolic SAR alone, it means you are actually trading against the overall trend, which is not a good idea. And that is why the solution to this is you need to combine the parabolic SAR with another indicator that can detect the long-term trend. An example of that would be the 200 period exponential moving average. So here's how the full strategy would work. The first step is you want to identify the long-term trend. And you can do that by looking at the position of the price relative to the 200 EMA. For example, if the price is above the 200 EMA, it indicates that the long-term trend is up. And if the price is below the 200 EMA, it indicates that the long-term trend is down. Now, once you've identified the long-term trend, the next step is you want to wait for the parabolic SAR to show the same signal as the long-term trend. For example, here, we can see that the price is below the 200 EMA, indicating that the long-term trend is down. This means that we're waiting for the parabolic SAR to also show bearish momentum by waiting for it to go above the candle. Once this happens, you take a short position. Now, it's the same for long positions as well. Here, we can see that the price is above the 200 EMA, indicating that the long-term trend is up. Next, you want to wait for the parabolic SAR to also show bullish momentum by waiting for it to go below the candle. Once this happens, you take a long position. And so, by simply adding the 200 EMA into the strategy, you can now safely trade the parabolic star while making sure that you're still aligned with the long-term trend. Now moving on. Besides using the parabolic star as an entry strategy, you can also use it as an exit strategy as well. And one of the most common ways that traders use it as an exit strategy is by simply waiting for the parabolic star to switch positions. Let me show you an example. So here, we can see that the price is above the 200 EMA while the parabolic star is below the candle. And according to the strategy, this would be your long entry. Now for your exit strategy, you can let the trades run until the parabolic star switches positions. So once it switches, you can exit your trade. However, by doing this, notice that the price had already made a significant downwards movement before the parabolic star displayed an exit signal, meaning you already lost a portion of your profits because of the late exit signal. And so what if I told you that there's a better way? So first, let's rewind back this trade. Now, instead of waiting for the parabolic star to switch positions before exiting your trade, you can instead set a stop loss at the parabolic star itself. So if you enter a long position here, you can set your stop loss below here at the parabolic star. And for your profit target, you can set it at 1.5 times your stop loss. And then, all you need to do is let the trades run until the price hits one of the target. And as you can see, using this exit strategy actually results in an earlier exit signal compared to if you waited for the dot to switch positions. Now, there are times where the parabolic star is placed too far from the candle. Like in this example, here we can see that the parabolic star is positioned way below the candle, meaning if you set your stop loss all the way down here, you'll be risking a huge amount if the trade ends up being a loss. And so if you think that a stop loss is placed way too far like this, you can just adjust it depending on your personal risk tolerance. Now moving on. The next high win rate strategy that you can use with the parabolic star is by using it to find divergences. So first, what are parabolic star divergence? So a parabolic star divergence is when the price is moving in the opposite direction of the indicator. Let me show you an example. So usually, if the price is heading upwards, the parabolic star will follow that direction and also head upwards. Similarly, if the price is heading downwards, the parabolic star will follow that direction and also head downwards. However, there are times where they move in the opposite direction instead. Like in this example, you can see that the price goes down, but the parabolic star is going up. This is what's called a divergence. And usually, when a divergence has been formed, it may indicate that the trend will form a continuation, therefore giving you a possible trade opportunity. So here's how the strategy works. The first step is you want to find a divergence, and to make it easier to find one, I like to change my chart type into a line chart. Next, you want to find instances where the parabolic star is moving in the opposite direction of the price. Like in this example, here, we can see that the parabolic star is heading downwards, but the price is heading upwards instead. And so this will be your divergence. Now, the question is, how do we know if this is a bullish divergence or a bearish divergence? So to answer that question, you simply need to look at the direction of the price as the divergence is forming. So in this particular example, we can see that the price is heading upwards, meaning this is a bullish divergence. Now the next step is waiting for your entry signal. So for your entry signal, after the bullish divergence has been formed, you want to further confirm the bullish momentum by waiting for the parabolic star to switch below the price. So once this happens, you enter a long position. Now for your stop loss, you can place it at the parabolic star and set your profit target at 1.5 times your stop loss. So let's look at another example. Here, we can see that the parabolic star is heading upwards, but the price is heading downwards instead, meaning we just found another divergence. Now, since the price is moving downwards as the divergence is forming, it indicates that this is a bearish divergence. Next, for your entry signal, you want to confirm the bearish momentum by waiting for the parabolic star to go above the candle. So once this happens, you take a short position. Now for your stop loss, you can place it at the parabolic star and set your profit target at 1.5 times your stop loss. And as you can see, this trade ended up being profitable. Now, we all know that the cryptocurrency market have begun trending lately, which means it is the perfect time to trade it using the parabolic star. And for all you guys out there that wants to start trading cryptocurrency, you can check out today's sponsor, BitGet. BitGet is a regulated cryptocurrency copy trading platform designed specifically for derivatives trading. And if you sign up using the link below, you can get rewards worth up to $630 by completing the tasks available on their website. And for new traders out there that are just getting started, BitGet has a feature called copy trading that lets you automatically copy the trades from top performing traders around the world. With over 1.5 million users, BitGet is ranked number 8 worldwide on CoinMarketCap. It also has a built-in TradingView chart, which means you can analyze trades and execute them within the same platform. BitGet is also available on mobile devices, meaning you can trade anytime and anywhere. You can also join the BitGet Telegram group, where they'll host frequent giveaways and competitions for you to win. And again, if you use the link below and complete all the tasks, you can get rewards worth up to $630. So big thanks to BitGet for sponsoring this video. And so that's all for today. Thank you so much